Hello and welcome. You're watching Primetime. My name is Ayush Alavadi. Let's start with today's headlines. Digital deals drive TCS's performance in the third quarter. Net profit and revenue rise over a percentage each. IndusInd Bank's profit rises 25%, but net interest income growth slows to a 10-quarter low. CEO Ramesh Sopti says the Indian economy is well past green shoot stage. Bloomberg reports that Reliance Jio may deliver net profit as early as the December quarter. SEBI bars Pricewaterhouse entities from issuing audit certificates for 2 years for its role in the Satyam scam. Bitcoin slumps to its lowest level since Christmas Day as South Korea reiterates a proposal to ban local cryptocurrency exchanges. Well, let's start with our top corporate story of the day. Tata Consultancy Services met analyst estimates in the third quarter on the back of large deal wins and strength in its digital business. Net profit rose by 1.3% to 6,531 crore rupees. Revenue in rupee terms increased by 1.2%, while a dollar revenue rose by 1%. Operating margin rose marginally to 25.2%, while EBIT rose by 1.6%. Agam Vakil sums up the key takeaways from TCS's quarter 3 performance.
So TCS posted about 1.3% constant currency growth on a sequential basis, and that is largely in line with Bloomberg's consensus expectations. Also, in terms of digital revenues, it has seen as much as nearly 40% growth on a year-on-year basis, and digital business now contributes to well over 22% on the consolidated revenues. That said, the company has also signed its largest digital deal yet, standing at over $50 million. Moving in terms of verticals, the banking, financial services and insurance vertical continues to show weakness. In fact, we have seen a 1.5% decline on a constant currency basis for the quarter, and the management says that they are in a wait and watch mode for this particular vertical as growth remains patchy. On the other hand, its retail vertical has done very well, where we've seen about 6.4% growth sequentially in CC terms, and the management said that this particular vertical had bottomed out in the last quarter and meaningful recovery is now in place. And finally, when it comes to its outlook, the company says that it's early days when it comes to client budgets and the estimations, but business confidence among many verticals continues to improve. On the whole, a quiet quarter for TCS, largely in line with street expectations.
Well, the company's managing director and chief executive officer, Rajesh Gopinathan, said that Europe will become the company's second largest market after the US in the next year. Gopinathan added that he expects the margin profile of the digital business to improve further.
Europe is on a very strong trajectory, and if it continues on this trajectory, we expect Europe to become, sometime during the course of next year, our second largest market after the United States. So we're very, very happy about the performance in Europe and optimistic about it going forward also. Other geographies continue to operate. The US delivered growth which is marginally better than company average. Margin profiles are very different. So we have always said that as digital grows at scale, its margin profile will continue to improve. And we are still continuing to be on that path. And our ability to stitch these deals together, stitch larger engagements, which fundamentally leverage digital, is going to be a big differentiator for us and a clear outperformance driver.
Urmil Shah, AVP and research analyst at IDBI Capital, joins us now on the phone line. Thanks so much for joining us, Urmil. Now, I want to understand, what do you make of the management's wait-and-watch approach in the BFSI vertical, which continues to show some signs of weakness?
Yeah, so, this is very specific to, select large banking clients and more so over in the retail banking side is where they are seeing softness. So yes, this is expected to continue for the next couple of quarters, while insurance has seen a pickup. But till BFS improves, the overall vertical will continue to see softness.
Right, Urmil. I also want to get your take on what you really make of the company's digital deals. Can these deals gather enough momentum to eventually drive annual growth to perhaps double digits?
Yeah, and it is already doing it. So if you would look at, the non-digital pie, that is growing at low single digit. It's only because of digital that they have been able to grow at high single digits, and it would all depend upon how BFS actually does in the next year. If the growth over there picks up, then yes, there is a high probability of they getting back to double digit next year.
Another thing that's been interesting with these results is obviously, the strong turnaround in the retail and CPG vertical. Now, is the strength in the retail vertical here to stay, according to you, Urmil?
Yeah, I think so, and that's what we understood from the commentary from the company over the con call as well, as that now the growth is coming more from an integrated play rather than brick and mortar versus the online retail segment as it was earlier. So their clients like Home Depot have seen good growth in the last holiday season. So this augurs well for retail CPG for them, and the company did say that they are confident of a double-digit growth for the segment on a full-year basis in FY19. So that looks good.
Right, Urmil. Really appreciate you joining us on Bloomberg Quint on Primetime. Well, moving on, IndusInd Bank's profit met analyst estimates in Q3, while its asset quality deteriorated marginally. Net profit rose 24.7% year-on-year to 936 crore rupees. Net interest income rose 20.1% to 1,895 crore rupees. Gross NPAs rose to 1.16% compared to 1.08% in the previous quarter. Gross NPAs in absolute terms rose 11.4% to 1,498.7 crore rupees. Net bad loans also rose marginally, while provisions for bad loans fell when compared to the previous quarter. MD and CEO of IndusInd Bank, Ramesh Sopti, says that while the capex is still patchy, he sees a strong growth in working capital demand and buzz in the economy once more.
I think there's a very firm trending that we are now seeing, and from the initial trending of working capital, we are also seeing capex building up of the nature that I explained to you. So I think there's a firm trending now. We can see, and you can see the numbers yourself. Credit growth doubled to 10.6% from 5%. Capex is a little patchy. It's here and there, but there's definitive trending on working capital. And even if retail had grown 17%, overall credit could not have grown 10.6% if corporate was not growing. So there is a pull, certainly. I mean, you can feel the little buzz coming back into the economy.
Feel a little buzz coming back. Vishwanath Nair joins us now. Vishy, the management sounds quite upbeat. What's fueling all of this optimism?
Well, Ayush, if you look at what Ramesh Sopti was saying while announcing the results earlier today, he was pointing out that IndusInd Bank has been growing at about 25% consistently over many quarters. So it's not something new for them. But what is new for them, however, is where this growth is coming from. They're pointing out sectors like power transmission, engineering and manufacturing, and commercial vehicles, which is an important indicator for the entire economy. They're saying that the commercial vehicle disbursements have grown about 40% on a quarter-on-quarter basis. Now, this is significant for a bank like IndusInd Bank, which depends heavily on this particular loan book. They're saying that there has been a lot of pent-up demand in the past, which is now coming out, which means companies which make these commercial vehicles are borrowing from the bank. Also, people who are buying these commercial vehicles from these companies are also borrowing from the bank. So essentially, that book has been growing quite a bit, and they feel that this is pointing towards a strong sort of comeback. They're also pointing out that he said earlier, you heard what Mr. Sophie said. He said that the capex has been patchy, but where they see demand is in the brownfield capex, which is basically companies adding capacities to existing projects. That is where he's seeing some sort of comeback. Working capital has been strong for about about 3 quarters, but there's capex slowly coming back. He's saying that it's not just true for IndusInd, but also for the entire banking sector. And as banks start reporting the results, this is going to become more prominent, is what Mr. Sopti said.
Right, Vishnu, I'd really appreciate that update. Thanks so much. Now, less than 18 months after Reliance Jio disrupted the telecom market, Mukesh Ambani's telecom venture is on course to record its first ever quarterly profit. Bhuma Srivastava from Bloomberg joins us on the phone line for more. Bhuma, this is interesting. I mean, earlier the talk was all about, well, gaining more market share for Jio, but they're managing to do that and also tread on the path of profitability.
That's right. So it seems that they're on course for reporting their first ever quarterly profit by March. It could happen as early as December quarter, results of which are expected to be announced sometime next week. And yes, they seem to have been aided in good measure by the IUC cut, the interconnect charges that were slashed by TRAI in September and was operational October 1 onwards. The full impact of those reduced costs are expected to come in the quarter gone by, and that may help them possibly report profits.
Right, Bhuma. So IUC being one, are there any other factors perhaps that have worked in Reliance Jio's favor?
Well, one thing is definitely the rate at which that they have mopped up subscribers. That has surprised most people. And if those numbers keep building the way they are, revenues will keep piling in. And if costs have reduced as much as IUC charges, then both the factors put together will help Reliance. The only thing that can play spoilsport is a possible depreciation charge and interest on loans. That's something that we'll have to keep out an eye for. But other than those, subscriber numbers and IUC being slashed, those two are the factors working in the advantage.
Right, Bhuma. Thanks so much for that update. Now, moving on. Indian markets closed at record highs as investors focused on quarterly earnings. Both the benchmark indices clocked gains of nearly 0.2% and the Nifty closed the session above the 10,650 mark. Among individual sectors, the realty index posted gains while the energy index incurred losses. Neeraj Shah sums up the day's market action.
There's a fair bit of green on the bourses as well today, though you could argue that it was a flat day of trade. So essentially consolidation for the large caps, mid caps too pretty much in the same vein, and which is why the market breadth wasn't terribly impressive. It's just about even Stevens. What did well and what didn't? So since we were talking about green, I think technology continued its gains. You could argue mixed bag again out here, but Infosys and Tech Mahindra continues the robust move. So good moves there amongst the top gainers on the index. And amongst the top gainers on the index were also some comeback boys of sorts. iShares, it's been having a few in different days today. A good solid 1.5% kind of a move. Bharti Airtel had about 1.5% kind of a move as well. So those two did well for themselves. What didn't do well was IndusInd Bank. Post its numbers came off about a couple of percentage points lower, and it also had a collateral damage on Bharat Financial naturally. So both of these stocks came off post in the next 1.5 hours after the announcement of the IndusInd Bank numbers. I don't know if it's asset quality disappointment or otherwise, but yeah, both the stocks came off today. This was the big news maker, by the way. What did do well at the broader end of the spectrum, I think real estate and the nature of the rally or the nature of the movers was different. We haven't quite seen Oberoi Realty and Godrej, while they've done well, be at the center stage. It's always been the fringe players which have been out there. Now the two large boys from Mumbai make their presence felt. Oberoi up about 5%. Godrej didn't do too badly, so these did okay. Also on those rumors of impending or a coming up merger, IDFC Bank and Capital First, both of them shot up in trade. They say no smoke without fire. Let's see if there is indeed a fire that comes about a bit later on. Last but not the least, want to mark one key loser in trade. There were a clutch of them, but one key loser was Fortis, which corrected about 7.5%, was the top loser on the Nifty 500.
All right, Namex crude is trading at a 3-year high near the $64 mark after US stockpiles dropped again. Futures in New York advanced 0.4% after rising 3.5% the previous 3 sessions. Jeff Curry, global head for commodities at Goldman Sachs, says that if oil prices rise above $70 a barrel, it'll force OPEC to consider ways to drop down oil prices. Listen in.
The key is really where the forward price is, not where the spot price is. And I go back, forward prices 1 year out are trading somewhere around 61 to 62, cost basis of 50, 55. That's what they're targeting. If you can keep that back end anchored, that front end can do whatever it wants, because the investment in the shale does not take place on that front end price, but rather on that back end price. Now, in terms of where do they want prices to go, getting too far above 70 starts to create the risk that central banks respond to the inflationary pressures off of higher oil prices. I would tend to think that OPEC members do not want to see that, and that in general we'll probably see more noise and rhetoric if prices trade above $70 a barrel in the coming days to push this market back down to lower levels. But I think the real key here is look at those forward prices. Where are they anchored relative to the price? Because that's the signal for investment, not the spot price.
All right, 9 years after the Satyam scam came to light, market regulator SEBI has found the company's audit firm, Price Waterhouse, guilty of overlooking the anomalies. Payaswini Upadhyay joins us now on the show with more details. Payaswini?
Well, SEBI has concluded that the auditor, Price Waterhouse, failed on 3 aspects to perform its duty as the auditor of Satyam Computers. And the 3 broad heads are: it failed to audit the fixed deposits and balances in current accounts of the company. Second, it failed to identify over 7,000 fake invoices. And finally, it failed to confirm debtor balances in the accounts. Now, let me elaborate on all these 3 a little bit more. SEBI said that PwC relied on the company to confirm the cash and bank balances rather than directly confirming it with the Bank of Baroda New York branch, which is the main or the most significant current account of the company. And SEBI's investigation showed that the seal on these papers and they was fake, and there were signatures that were forged on these documents. These FDs were overstated by over 3,000 crores. The FD receipts were fabricated, and these are the ones that PwC relied on and sought no direct confirmation from banks. The SEBI investigation also concluded that that PwC also failed to acknowledge that the internal auditors had flagged this issue off, but PwC failed to take notice of it. The second issue that where PwC has been concluded to be guilty of is failing to identify over 7,000 fake invoices in respect of non-existent transactions, work orders, and even fictitious customers. SEBI points out that PwC did not reconcile the invoices in the 2 systems, and hence it did not even detect these fake invoices that were manually being transferred from one system to the other. And by accepting the information provided by the company at face value and performing a perfunctory job, the auditor failed to live up to the expectations of the shareholders. The final count on which PwC has been found guilty is to failing to perform the basic audit function of seeking and obtaining external confirmation of debtor balances. SEBI points out that PwC violated the accounting standards by not seeking external confirmation and by not resorting to alternative procedures such as examining specific subsequent cash receipts, etc. On all these fronts, SEBI has said that these omissions by PwC violated the accounting standards, namely ones that require the auditors to rely on external confirmation, especially for material financial information. And the order, the SEBI order concludes that the 11 PwC entities cannot sign off as auditors on a listed company's accounts for a period of 2 years, and has directed these 11 PwC entities and 2 partners that signed off on Satyam's account to disgorge 13 crore rupees plus interest. We spoke to former ICAI President Amarjit Chopra on the impact of this order on the auditing profession.
Auditor today is in a very, very precarious kind of a position, because the promoters, the bankers, the other people can also be in leave, very frankly. But so far as these fake documents are concerned, with regard to the invoices, etc., I think it's a major challenge that the audit profession faces today. If certain auditing standards have not been complied with, in that case, I think the law has to take its own course.
Now, to understand SEBI's move and whether or not this order was a case of too little, too late, we'll be discussing that with Anil Singhvi of ICAN Advisors on Prime Time Debate. Well, December has proved to be a good month for automakers, clocking double-digit sales growth across the board. Commercial vehicles, however, led the charge with over 50% growth. Krishanu Mukherjee gets us all the details in this report.
The month of December, yes, was a surprise when it comes to passenger cars, especially because the sales of passenger cars during the month actually fell by 0.2%. Now, this is a change compared to all the other categories. Looking at two-wheelers or commercial vehicles, sales grew by as much as 50% in the commercial vehicle space and around 41% in two-wheelers also. The overall sales growth across the industry in the domestic sector was 36%, but then passenger cars were lagging behind. Now, this notwithstanding, SIAM has actually revised its forecast rather upwards from what it had projected for the ongoing fiscal during the beginning of it, from 7 to 9% for passenger vehicles to the upward limit of 9%. For commercial vehicles, however, the forecast was 4 to 6%, and now because of the stellar sales through the year, especially on a low base, of course, also that point needs to be counted, but because of stellar sales, now the forecast has been revised upwards to as much as 13%. The same goes for the two-wheeler category and the other categories also. Now for the upcoming budget, SIAM has demanded a few things, one of them being that they do not want the import duties across all categories to be reduced. Now, there have been talks within the government that the import duty on some categories of vehicles may be reduced. Especially for CVs, they want it to be doubled from the existing 20% to 40%. The other demands include a reduction in, or rather an increase in the incentives that the companies are given for R&D activities, which used to be at 200%, but has now been reduced to 150%. Now, these are the demands of SIAM, and the month of December was a surprise in the passenger cars category.
In budget, first of all, every year in budget we discuss about the indirect tax, the excise duty, etc., etc. But this time, because GST Council is continuously sitting and they are addressing the indirect tax issue, that has been out of the budget preparation exercise. So we are left with only the direct tax and the import duty. We have talked about both direct tax and import duty, not a very significant recommendations, but we have talked about that please do not reduce the import duty on CBUs, the complete built unit. Please keep it at the same level for passenger vehicles, two-wheelers and others. For commercial vehicles, we have said that in fact the duty should be increased from current 20% to 40%, because actual duty is 40%, but through an exemption route, the government has kept the duty at 20%. We are saying that please go to the 40%, what was originally announced. And we have, in fact, in WTO also our bound rate is 40%, so we can easily go up to 40% and keep it at 40%.
Well, Bangalore-based ad discovery platform InMobi has made its biggest acquisition till date, buying out Los Angeles-based startup AirServe for $90 million. What's the rationale behind this deal? Nishant Sharma gets the answer.
So in its biggest buyout ever, mobile advertising company and India's first unicorn, InMobi has acquired a US-based advertising startup, AirServe, for $90 million in a cash plus stock deal. Now, InMobi said in a statement that the deal will help the company to enhance its monetization for publishers globally, and will also solidify its position in the advertising mobile advertising market, where it competes with the likes of Facebook and Google. Now, the SoftBank-backed company, which last year announced to have achieved operational level profitability, said that with this acquisition, the company's video and programmatic business will roughly account for about 35% of its revenue.
This acquisition essentially makes us one of the most formidable platforms in the world on mobile video advertising. And it was one of the capabilities that we didn't have specifically with regards to as advertising moves to programmatic. It was not one of the capabilities that we had. So with the acquisition of AirServe, we actually get that capability and literally combine that with our large-scale presence across the world. And therefore, this is a massive deal.
Former finance minister and senior Congress leader P. Chidambaram has questioned UIDAI's move to introduce virtual IDs to secure Aadhaar data. Earlier today, Chidambaram tweeted that millions of people have already shared their Aadhaar numbers with several service providers. He also said that the new security layer is like locking the stable after the horses have bolted. This comes a day after UIDAI introduced a 16-digit virtual ID to mask the Aadhaar number for a given period. For any given Aadhaar number, there will only be one active VID at a given time. The UIDAI hopes that this will reduce the collection of Aadhaar numbers by various agencies. And we'll be talking more on Aadhaar and the security and privacy concerns that it raises. Is Aadhaar really hack-proof? Well, the government and UIDAI seem to think so, but cyber law experts around the world don't necessarily share that view. They're divided on that one. So we'll actually be talking to renowned cyber security researcher Troy Hunt on his recent blog about the Aadhaar program, and then we'll also be joined by Saket Modi just to understand what all these developments are all about. This is your one-stop shop to understand everything about Aadhaar and its new VIDs and limited KYC provisions. Now, if you're an employee or a job seeker, here's good news for you. A Mercer report shows that salaries in India are expected to grow by 10% across industries. This hike is because more companies plan to hire this year. The survey of 791 organizations across sectors found that 55% intend to hire in the next 12 months. The number stood at 48% last year. So where will the hiring take place? Shared services and high tech lead the pack. Attrition is expected to marginally decline from last year by 1.8% to 11.5%. Bitcoin has stumbled below the $14,000 mark. The latest blow to the world's biggest cryptocurrency game came from South Korea, which is considering a potential shutdown of some exchanges. Bloomberg's Eric Lam gets us the details in this report.
In South Korea, it's kind of a continuation on a theme we've been seeing from South Korean government over the last few months. Is the Justice Ministry was speaking to reporters today saying that they're preparing a bill that would potentially shut down cryptocurrency trading on exchanges in South Korea. This has been kind of an ongoing concern in the South Korean government. The South Korean Prime Minister late last year warned that it could corrupt the nation's youth, and South Korea's become kind of a ground zero for Bitcoin trading or cryptocurrency trading worldwide. South Korea and Japan have become kind of two of the largest, most popular places for trading cryptocurrencies. So for industry investors, this was not necessarily a surprising move, but it was still a negative one. We're seeing Bitcoin dropping, some of its rivals, Ripple, Ethereum, they're also dropping as well. So definitely some money is getting taken off the table.
Well, that's about all the time we have on Primetime, but stay tuned for more programming on Bloomberg Quint.